Beverly spent 31 years as a school librarian in New Brunswick, 31 years of paying taxes, 31 years of doing everything right. When she retired, she did what a lot of Canadian seniors do. She walked into her bank and withdrew a large amount of cash from her savings account. She wanted control over her money. She wanted it close. She had earned it. She had broken no law. She had made no mistake. She simply took her own money. But within 10 days, her phone rang, and it was a call she never expected. Her bank had filed a report, quietly, without telling Beverly. That report went to FINTRAC, the federal agency that monitors large cash transactions across Canada. And from there, it found its way to the CRA. The CRA opened Beverly's income file. A review began. And while that review was running, Beverly's GIS payments were placed on hold. GIS, the Guaranteed Income Supplement, the monthly benefit that goes to Canada's lowest income seniors. The money Beverly was counting on every single month, gone for 2 full months while a government review ran its course. Beverly had done nothing wrong. That money was hers, her savings, her lifetime of work. But the system flagged her anyway, and not one single person had warned her this could happen. Not Service Canada, not the CRA, not her bank, nobody. And Beverly is not alone. Right now, approximately 2 million Canadian seniors receive GIS. These are the people with the lowest incomes in this country. These are the people most likely to manage cash at home. And these are the people who are the least likely to have a financial advisor explaining federal banking reporting laws to them over a cup of coffee. If you have ever made a large cash withdrawal from your bank account, or if you are planning to in the coming months, this video is for you, because what happened to Beverly can happen to you. And the way to prevent it is so simple it will surprise you, but only if you know about it before you make that withdrawal. Stay with me, because what I am about to explain covers your CPP, your OAS, and your GIS, and most Canadian seniors have never heard any of it. Let me start with the law itself, because this is not a new rule. This is not something the government quietly introduced last month. This has been federal law in Canada for over 2 decades, and most seniors receiving CPP, OAS, or GIS have never been told a single word about it. The law is called the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. It received royal assent in the year 2000 and has been updated several times since. Under this law, every single bank, credit union, and financial institution in Canada is legally required to file a large cash transaction report with FINTRAC, the Financial Transactions and Reports Analysis Centre of Canada, anytime a customer deposits or withdraws $10,000 or more in cash, not $20,000, not $50,000, $10,000 in a single transaction, and your bank does not have to tell you the report was filed. They are not required to. You may never know it happened. Now here is where it directly connects to your benefits. The CRA and FINTRAC have expanded their data sharing in recent years. CRA compliance teams are now cross-referencing large cash transaction reports against benefit recipient files. That includes CPP pension records, OAS payment files, and GIS eligibility data. According to Statistics Canada, approximately 7.1 million Canadians currently receive OAS. Of those, roughly 2 million also receive GIS, meaning they are the lowest income seniors in this country. These are the exact people most likely to keep cash at home, and these are the exact people whose benefit eligibility is most sensitive to any income review triggered by a banking flag. This is not theoretical. The CRA has used FINTRAC data in compliance reviews for over a decade. What has changed in 2026 is the scale and the direct pipeline between a flagged cash transaction and a benefits file review. Who is affected? Any senior who makes a cash withdrawal or deposit of $10,000 or more. Any senior who makes several smaller cash transactions that the bank determines are connected. And any senior whose account activity is flagged as unusual relative to their normal banking history. Who is not affected? Seniors who use electronic transfers, checks, or direct deposit for large amounts. The reporting law applies specifically to physical cash. This distinction matters, and most people have never been told about it. Stay with me, because the part that connects this directly to your GIS renewal deadline is something almost no coverage ever mentions. The first thing every Canadian senior needs to understand is exactly what triggers the report and what the bank is actually looking for. Most people assume the danger is only a single large withdrawal. It is not. Yes, a single cash transaction of $10,000 or more automatically generates a FINTRAC large cash transaction report. But according to FINTRAC's official compliance guidelines published at fintrac.canafe.gc.ca, there is a second trigger that catches far more people, and it is called structuring. If your bank suspects you are intentionally making multiple smaller cash withdrawals to stay under the $10,000 limit, that alone generates a suspicious transaction report. No minimum amount required, no threshold to cross. Just a pattern your bank considers unusual. This is the rule almost nobody talks about, and it is the one that surprises seniors the most. The second element is where the real financial damage happens, and it connects directly to your GIS. When a FINTRAC report triggers a CRA income review, Service Canada places your GIS file in a pending status while that review runs. The maximum GIS payment in 2026 for a single senior is $1,086.88 per month. But the average GIS recipient receives approximately $560 per month because most seniors have some additional income that reduces their supplement. Losing 2 months of GIS while a review proceeds means over $1,100 gone from a household that is already living on low income. And here is the part that makes it worse. Service Canada does not send you a letter explaining why your payment stopped. You have to call, you have to wait. And the clock keeps running. Third, and this is the connection that links back to your OAS. The OAS recovery tax threshold for the 2025 tax year begins at $90,997 in net income, according to the CRA's officially published figures. If a cash transaction gets misclassified during a review as undeclared income, even temporarily, it can push your declared income past that threshold and trigger a clawback repayment demand. The CRA corrects these errors, but the repayment demand arrives first, and most seniors pay it and dispute it after. Canadians who work with retirement financial planners already know these three pressure points. Their advisors flag them before the first large withdrawal is ever made. Most seniors on CPP, OAS, and GIS find out only when the payment stops. Now you know before that happens. Now here is the connection that most coverage misses completely. And I want you to pay close attention here, because this is the part that nobody else is talking about. Not the news, not other channels, nobody. This banking rule does not just create a risk for your CRA tax file, it connects directly to your GIS renewal, and the connection runs through a deadline that most Canadian seniors do not even know exists. Here is exactly how it works. GIS is not automatic. It does not just continue year after year on its own. According to Service Canada's official GIS renewal guidelines published on canada.ca, your guaranteed income supplement is renewed every single year based on your most recently filed tax return. Service Canada takes the income figure from your tax file and uses it to calculate whether you still qualify for GIS and how much you receive. That renewal process runs on a strict annual schedule. The deadline is July 31st, every year. Now here is where the banking trap enters. If a FINTRAC report on your account triggers a CRA income review, even a routine one, it can delay the processing of your tax file. Not permanently, not forever, but long enough. If Service Canada cannot receive confirmed income data from your CRA file before the July 31st renewal deadline, your GIS does not pause. It does not reduce. It stops. Completely. According to Service Canada's published guidelines, if your renewal information is not processed on time, Your payments are discontinued and a new application is required to restart them. A new application. More processing time, more weeks without income. And here's the dollar reality of that. The average GIS recipient in Canada receives approximately $560 per month. If your payments stop for 8 weeks while a new application processes, that is over $1,100 that does not come back to you. It is simply gone from your household budget for that period. Beverly found this out the hard way. Her CRA review created a delay. That delay crossed the July 31st deadline, and her GIS stopped. Not because she owed anything, not because she had declared anything incorrectly, but purely because the timing of a routine banking report collided with a government deadline she had never been told existed. This is the trap. A banking event you did not know would be reported, triggering a review you did not know was coming, crossing a deadline you did not know existed, stopping a payment you were counting on.